Phoenix Solar Panel Systems now installs residential solar in 29 states.
Hi, this is Solar Steve Esquire. I'm the owner of Phoenix Solar Panel Systems. We help people save money by installing solar in 29 U.S. states across the country. Now, I was born and raised here in Phoenix, Arizona, and I graduated law school in 2010 and passed the Arizona bar exam in the same year. I practiced law as a trial attorney for 7 years, and I've been running my solar company for the last 5 years. Now, recently on August 16, 2022, the federal government passed the Inflation Reduction Act of 2022, and that included some updates and changes to what we call the solar tax credits. I'm going to teach you about the solar tax credits and the changes to them. Now, my analysis of this law is based on my education, training, and experience in the law. However, I'm not currently licensed to practice law, so don't rely on what I say as legal or tax advice. Since I started solar, I've seen that a lot of homeowners and people selling solar have a lot of confusion about how the solar tax credits work. And I'm going to make a few videos so that I can clear that up. And so homeowners can watch them to educate themselves, and people selling solar can watch them to educate themselves and help their customers better as well. Some of this is due to lack of research by the homeowners and the solar salespeople. Also, the solar tax credits are in the United States Code under Title 26, which is considered the Internal Revenue Code. And this law is very difficult to read. I remember, in my first year of law school, it took me about 6 months to be able to learn how to read the law and case law because it's like a different language. It's written in a very complex way and you have to study it and get used to reading it. So understandably, a lot of people don't understand it and they are confused when reading it. So even with my extensive training and experience in the law, when I read these solar tax credits, they're a little confusing to me and they're a little complicated. So it took me a while to analyze them to really pick out all the pieces of it. And so, it makes sense that some people are confused when it comes to the solar tax credits. Even with extensive training, education, and experience in the law, I still had to take some time to read the United States Code to fully understand these solar tax credits. So it's understandable that most anyone who reads it is going to be very confused by the language of this law. So I'm creating this video to teach homeowners and also solar salespeople how the tax credit works. The House of Representatives Bill 5376, also known as the Inflation Reduction Act of 2022, became law on August 16, 2022. I will call the Inflation Reduction Act the IRA for short. This updated 2 sections of Title 26 of the United States Code. This title of the United States Code is also known as the Internal Revenue Code. The 2 sections updated are 25C and 25D. These 2 sections are what we call the solar tax credits. I'll go over Section 25C first. This was called the Nonbusiness Energy Property Credit. The Inflation Reduction Act changed the name of this section of the law to the Energy Efficient Home Improvement Credit. This section does not cover residential solar panel systems. It covers tax credits on other items of home energy upgrades. The biggest changes were the tax credit was extended to December 31st, 2032. The credit was increased to 30% of the sum of qualified energy efficiency improvements and residential or qualified energy property expenditures. Solar and other home energy efficiency upgrades installed after December 31st, 2021 will qualify for these new tax credits. The law is talking about 2 different types of property here: qualified energy efficiency improvements and residential or qualified energy property. Residential or qualified energy property are the same thing, whether it's called residential energy property or qualified energy property. First, we'll cover the qualified energy efficiency improvements. Qualified energy efficiency improvements are brand new components, and they're expected to remain in use for at least 5 years, and they're installed at the taxpayer's principal residence. The principal residence is defined as a property where the taxpayer lived for an aggregate of 2 years or more during the last 5 years. Under this definition, a home would qualify as a principal residence if the taxpayer lived in the home for 1 month, then moved away, then moved back for 6 months, then moved away, and then moved back for 17 months. If an aggregate of 24 months living in the home occurred during the last 5 years, the home qualifies as a principal residence. Previously, the law only gave a 10% tax credit to qualified energy efficiency improvements. The IRA increased this tax credit to 30%. The definition of qualified energy efficiency improvements has always and still includes exterior windows, skylights, exterior doors, and the IRA added air sealing as now qualifying as a qualified energy efficiency improvement and is now included in the tax credit. The IRA removed metal and asphalt roofing as a qualified energy efficiency improvement, and it's also been removed from the tax credit. Roofs have been removed from the tax credit entirely. The IRA raised the limitations that are placed on credits for qualified energy efficiency improvements. The law says you can claim 30% of the total price of what you paid, but then it puts limitations for the tax credit on certain items. So in reality, you can claim whatever is greater between 30% of the total price or the limitations stated. The limitation on tax credits for all exterior windows, skylights, and exterior doors installed in a taxable year was raised from $500 to $1,200. The taxpayer cannot claim more than $500 for all exterior doors. The taxpayer cannot claim more than $600 for any single window, skylight, or exterior door. The taxpayer cannot claim more than $250 for any single exterior door. And notice there is no limitation on air sealing, which means you can claim the full 30% of the price of air sealing as a tax credit. There have also been changes in the ratings and efficiency standards for qualifying energy efficiency improvements, but I will not discuss the technical aspects of that in detail here. Next are qualified energy property. Previously, there was a limitation of $300 for all qualified energy property. The IRA has increased the tax credit for qualified energy property to 30%. The definition of residential energy property has always and still includes an electric or natural gas heat pump water heater, an electric or natural gas heat pump, a central air conditioner, a natural gas propane or oil water heater, a natural gas propane or oil furnace or hot water boiler, a biomass stove or boiler, any oil furnace or hot water boiler. Advanced main circulating fans are no longer a residential energy property and have been removed from the tax credit. The qualified energy property now includes any improvement to or replacement of a panel board, sub-panel board, branch circuits, or feeder that must be installed in a manner consistent with the National Electric Code and have a load capacity of 200 amps or more, and be installed in conjunction with 1. Any qualified energy efficiency improvements, or 2. Any qualified energy property that is enabled by the installation and use of the board. There are many changes made to the energy efficiency ratings and specifications of what qualifies as residential qualified energy property. New limitations were placed on taking tax credits for residential energy property. Again, the law says you can claim 30% of the total price of what you paid, but then it's going to put limitations for the tax credit on certain items. So in reality, you can claim whatever is greater between 30% of the total price or the limitations stated. The tax credit for all taxpayers, they cannot claim more than $2,000 for all heat pumps, heat pump water heaters, central air conditioners, natural gas, propane, and oil water heaters. Notice there's no limitations on panel boards or sub-panel boards or feeders, so you can claim the full 30% on that. There's also language added about home energy audits in the new law. The IRA added a new $150 tax credit for home energy audits. Now, to claim this credit, the taxpayer must provide documentation and substantiation to the IRS if requested. A description of the documentation necessary has not been provided in the law yet, and they're still working on this. Thank you for watching this video. Please subscribe to my channel and reach out to me if you have any questions about what I've talked about. My contact information is in the description of the video. Thank you.
Call us at 602-753-0560 for a free consultation today.